To help you stay in control, we're going to explore a really fundamental shift, a shift in how you think about your wealth. It's about moving from being a passive passenger in the traditional financial system to taking active, lawful control of your own financial future. Let's dive in. This quote really gets to the heart of the matter. We're all taught that putting money in a bank means it's safe, that it's yours. But what if that's not quite the full picture? What if the whole system was designed to make you a client, not the actual true owner of your wealth? So this is the real question we have to ask ourselves, right? If your access can be denied, if your funds can be frozen, if you're exposed to the risks of the very institution that's supposed to be protecting your money, are you really truly in control? This is what we need to unpack. To really get to the bottom of this, we're going to walk through 5 key areas. First, we'll tackle the illusion of control in the banking system we all know. Then, we'll build a framework for what real sovereignty looks like. After that, we'll get into the actual tools, the rules you need to know, and finally, the first steps you can take on your path to autonomy. Okay, first things first, let's pull back the curtain on traditional banking. It's a system that's really built on promises, and it's absolutely crucial that you understand the difference between a promise and direct physical possession. See, this really lays out the contrast between what we think is happening and what's actually happening. You believe you own the money in your account, but legally speaking, you've given the bank a loan. You're a creditor. Your security is completely tied to the bank's own financial health, and your access, well, that's a privilege, not an inherent right. That number on your screen, it's just a promise to pay you back. So, if the old system has all these hidden risks, what's the alternative? Well, it's not about chaos or going rogue. It's about methodically building a new, personal, and completely lawful structure for your finances. Let's take a look at the architecture for that freedom. Economic freedom really stands on 3 pillars that are completely interconnected. First up is knowledge. You have to understand the nuances of tax law, of custody, of technologies like blockchain. Second is structure. Taking that knowledge and using it to build a rock-solid legal and technical foundation. And third, discipline. This is the ongoing process of checking your work, staying updated, and educating yourself. And these aren't steps you take one after the other. You build them all at the same time. With that framework in mind, let's get practical. What are the actual tools you use to build this thing? This is where we need to dig into the different levels of control you can have over your digital assets. So at the very bottom of the ladder, you've got third-party custody. Think of your traditional bank account. Yeah, it's convenient, but you've handed over all the control. Your access is completely 100% dependent on that third party. Now, a step up from that is what we call qualified custody. A perfect example is a cryptocurrency exchange. It's super useful for frequent trading and cashing in and out, but you're still trusting someone else. You're still vulnerable to their security systems, hacks, or even them going out of business. And that brings us to the top, the highest level of autonomy, self-custody. This is where you, and only you, hold the private keys to your digital assets. It gives you absolute control. No bank, no exchange, no government can touch your assets without those keys. But, and this is a big but, with that absolute control comes absolute personal responsibility. So how do you choose? Well, it's not a matter of one being good and the other bad. It's about using the right tool for the right job. Exchanges are for operations, for trading. Self-custody wallets are for secure, long-term storage. A really common strategy is to only keep what you're actively trading on an exchange and move the rest, your savings, into the safety of self-custody. Now, taking control doesn't mean you go off-grid or break the law. Actually, it's the exact opposite. True sovereignty demands that you understand and navigate the rules of the system. This isn't a barrier. It's just the rulebook for playing the game correctly. There's this huge misconception that blockchain and crypto are all about being anonymous. They're not. In reality, a blockchain is one of the most transparent public records ever invented. Every single transaction is out there, and it's permanent. For anyone building a lawful financial structure, this isn't a problem. It's a feature. It lets you prove the origin and movement of your funds with perfect, undeniable clarity. So what do these rules actually look like in practice? Well, let's take a quick example from Brazil's tax authority. Their regulations say that any individual whose crypto operations go over 35,000 Brazilian reals in a month, that's about 7,000 US dollars, has to report those transactions. It's a very clear example of how governments are drawing these lines in the sand. And you better believe these rules have teeth. Sticking with that Brazilian example, not complying comes with very specific penalties. Filing late, that's 100 reals a month. put in the wrong information, or leave something out, that's a fine of 1.5% of the transaction's value. The takeaway here is simple. Compliance is not optional. This brings us to a really critical distinction: lawful tax planning versus tax evasion. In Portuguese, it's elisão fiscal versus evasão fiscal. Planning is all about using the existing laws to your advantage, structuring your affairs for maximum efficiency, and it's all based on transparency. Evasion, on the other hand, is about hiding things, breaking the law. Our focus is and always will be entirely on the former. All right, we've talked about the problem, the framework, the tools, and the rules. So, how do you actually get started? Let's break this down into a real actionable plan. Here's a clear 5-step checklist to get you going. First, map out your assets. What do you own and what country's laws govern it? Second, do an audit of who's holding your money right now, your banks, your exchanges. Third, start learning about self-custody, but begin with a small amount you're comfortable with. Fourth, get organized. Document absolutely everything. And fifth, and this is a big one, talk to experts. This is a complex world, and getting professional guidance is essential. And as you start down this path, just remember this. Achieving financial autonomy, it's not a one-and-done thing. It's an ongoing process. It's about consistently applying those 3 pillars we talked about: knowledge, structure, and discipline. It's a journey of constant learning and fine-tuning. So, we end up right back where we started, but now, hopefully, with a totally new perspective. The technology for self-sovereignty exists. The legal frameworks are becoming clearer every day. The knowledge is out there. The only question left is, are you ready to become the architect of your own financial life?